The cryptocurrency world is still new and even the investors with the most experience still have only a few years of experience with it. Crypto space lacks the right infrastructure, hence, getting the best method to use cryptos is still difficult. It is even a bigger issue for the new investors who are coming in almost every time. Although there is the desire to grow, use this modern technology in a day-to-day life, it is distant from its perfected form. Due to this, several mistakes are being made from time to time from its use. Since technology is a bit different from the traditional financial tools, the manner in which it is handled has to be completely different as well. It is one thing that most novices take long to understand, and in the meantime, they make huge errors that can easily cost them a lot of money. Due to this, we saw it necessary to come up with a list of common mistakes that new investors make. 1. Failing to conduct their research. Carrying out your research is one important step for every investor. The fact is that any person on the internet has their own opinion and the crypto space is not in any way different. Due to this, crypto world newcomers will often make the mistake of depending too much on what other people say without taking the time to carry out their research. Although other people's opinions, especially influential people, can serve as a guideline, you should never take such an opinion as a guarantee. 2. Avoiding their coins. We do have a term called HODL in the crypto space. It is a misspelled version of hold and does represent the holding strategy of your coins. It is a very long-term strategy that is based on the belief that the market of the future will be much better than the current market. Many people do believe that it is crucial to keep the coins in a wallet and wait for better times instead of having to pass the coins immediately. Holding for a long time now has been known to affect the market as it represents trust in the coin. Selling them constantly does mean that there is no trust, which affects its price. 3. Getting into the game of mining with the aim of getting rich. Previously, during the first appearance of Bitcoin, crypto mining was very profitable, maybe not by those days' standards but by modern ones. Back then Bitcoin was a bit cheap and not every people were after mining it. The people who mined it back then are today rich. This made many people start mining Bitcoin. The situation has however changed over the years. Although Bitcoin is highly valued, mining it is pretty difficult as it needs expensive equipment, lots of resources such as power and time. Corporations have also discovered that there are lots of profits to be made in mining and have therefore created mining pools that have prevented individuals from getting to a new block. 4. Losing Bitcoin sight. Most of the new investors usually think it is late for them to start partying and that the prices of cryptos will not grow anymore. They are a bit pessimistic concerning it and they do believe that the prices can only drop at this point. However, this is not true and such type of belief will in most cases lead to losing Bitcoin sight. It is not a good move as Bitcoin is a leader and does represent the entire market. There is a slight change in the market which was not caused by the surge in Bitcoin price. In fact, the coin can always be used as an indicator of what will come for the rest of the crypto. The coin is not only an indicator of what will happen, but the Bitcoin itself does hold a huge amount of potential which should never be disregarded. 5. Failing to calculate taxes. Ever since the real crypto's potential came into light, governments of almost every country have started looking for a way on how they can exploit it. Their favorite strategy is the taxation of crypto-related profits. With that, they do not have to perform any work and they always make a profit from the technology. It is something that several people fail to realize in time and end up having to make huge tax payments which they never budgeted for in the first place. 6. Listening to other people and doing as they are told. It is always a great thing to listen to what other people have to say, especially if they have more experience and knowledge. However, depending entirely on what advice they give you is never a smart thing since their idea is one in many. Always use their opinion to help you form your own. Never depend on them fully since one single mistake that they will make will cost you much more. 7. Making decisions that are based on emotions. Changes in the crypto market can easily lead to strong emotions. It does not matter if there is an increase or drop in prices. It is never a great idea to make decisions that are based on emotions. Never be in a rush to buy or sell bitcoins since the price will have either gone down or up. It does pay much more to remain calculated and calm, to carry out your research, and make a decision that is based on probability and facts. Conclusion: making mistakes, especially when dealing with cryptos, is much easier. However, it is not a must you make one. Learn how you can prevent it from happening in the coming days. We do hope that this list of most common mistakes new Bitcoin investors make will help them in avoiding them. Even when it does, there are still several other traps you can fall into. Ensure you always remain careful, calculated, and calm. Learn everything about cryptocurrencies with Cryptonani.com.